Well, welcome everybody. I appreciate you taking the time today. I know everybody's got a busy schedule. I do want you to take a look today at this Deep Root Fund program. Nathan is going to go over it with us. One of the advantages I think is tremendous about this program is that we're all wondering sometimes what do we do with some of the annuities that have large surrender charges, and our clients are now wanting to start getting an income or wanting to let money accumulate. But they're locked into a large surrender charge with low caps. I think the Deep Root 575 fund would be an alternative for you to take a look at. And at this time, I'm going to turn it over to Nathan, who's the head of Deep Root, and he can go through the program. And again, if you have any questions, please jot them down in the chat box, and we'll go from there. Nathan, it's all
Awesome.
yours.
Thanks, Barry. Yeah, as you said, my name's Nate with Deep Root Funds. I'm the Director of Business Development here. Work with agents and advisors all over the country. Been working with Barry and his group for a while now and wanted to be able to present this and give this out to more of his agents and advisors out there, especially because of this annuity replacement program. So we have 2 different investment funds with 3 different investment options. So I wanted to take the time today to just go over both of those, as well as our annuity replacement program. We'll go over compensation and things of that nature as well. So as Barry said, I'll go over this. It should not take more than 10 or 15 minutes, and then happy to answer any questions at the end. So we'll just get started here. Couple quick disclosures before we get into everything. The information I'm going to go over with you is private, privileged, and confidential. So if anybody that has colleagues or wants more information or whatnot that's interested in working with Deep Root, obviously, feel free to go through the proper avenues with Barry. But then we're always happy to do a one-on-one call or video conference to clarify questions or go over this material in more detail. All securities require accredited investors or suitability qualifications. So we are a 506B, which means that we work mostly with accredited investors and a limited number of non-accredited. So if they are non-accredited, by all means, we're happy to have the conversation and discuss the situation of the client. It just means we need to take a closer look. And then all securities require a FINRA license or permissible exception. So we will talk heavily about the permissible exception and how that works if you're not securities licensed, so don't worry about that. So the Deep Root story, like I said at the beginning, we have 2 different investment funds with 3 different investment options. A lot of people see us as an annuity alternative, as that's one of our programs that we run is the annuity replacement program. But we're very easy to understand, easy to explain. The funds are meant and designed to be that way. Unlike annuities that have cap rates, participation rates, and a lot of variables or changing parts, it is meant to be very simple and easy to understand. Safety by design speaks to our asset class. So we invest in several different things. However, life policies is our underlying asset class, and we utilize that because of the inherent safety and mechanisms of how life insurance works. So essentially, we leverage the safeties and guarantees of life insurance in and of itself to be able to offer fixed rate returns to our investors that are non-market correlated. And then equity ownership speaks to the type of basically how they're investing. So it's not a debt structure, it is an equity structure, which means they're getting equity ownership of the fund, which in turn means that their capital is collateralized against the assets of the fund. Their initial principal is collateralized against the assets of the fund. So that's just kind of a little background info on Deep Root. Now we'll get into the actual fund of the 575. So the 575 is real simple. It's all in the name of the fund. It's a 5-year term, and then the investor chooses income or growth. If they're looking for growth, they would receive 7% a year, each year for 5 years, and that's deferred and paid out at the end of those 5 years. If they're looking for income, they would receive 5% a year. That's broken into monthly payments, paid out every month for 5 years. At the end of 5 years, they were already paid out their return. Their principal is still intact. We aren't paying them income out of their own principal. It's still intact, and they have the opportunity at that point in time, at the end of 5 years, to take their money and walk away or reinvest. And so as you're sitting down with investors, as they're looking to get out of annuities or just an investor without an annuity, again, they have 2 options, growth or income. 5-year term, 7% on the growth, or 5% on the income. Those are the standard rates. We've always got different incentives going on. We'll go over one of those incentives here in a little while. But that is essentially that's how the 575 works. So at the end of 5 years, they always have the opportunity to renew or take their funds and walk away. So there are some bonus opportunities at renewal if they do decide to renew. One of them is a 5% bonus if they end up renewing greater than 90% of their funds. But a lot of people, as they're planning, a lot of agents and advisors, as they're planning, end up putting their clients into the deferred option if they're still 5 years or so away from retirement, and then they have the ability to renew into the periodic option at that point in time. So that is the 575. The other fund I'll go over a little bit more high level, just a quick overview, just so you're aware of it. The DGRD is a first in, first out queue. The gist of it is that they invest their money, they wait in line on about a 4 to 6 year on average hold time. They get paid they get paid 52.5% fixed rate return. That is an overall return, not annualized. And then again, at the end, they either walk away or reinvest. So this is the queue. Again, they get in the back of the line. How the queue actually moves forward is by the maturity of policies. So when policies mature, we take those proceeds, pay off the front of the line. We take the front of the line, either takes their money, walks away, or reinvests, and then the line moves forward in sequential order, and the next investors wait for the next policy to come due. This is just an example of the payout of the queue. You have the first 3 investors up here on the top, A, B, and C. This is just showing as they got paid out, the line moved forward in sequential order, and the next investors are waiting in line to get paid out, waiting for the next policy to come due. Again, on average, somebody should move through the queue within 4 to 6 years, but it could be a little bit less, could be a little bit more, just depending on those policies. I think Barry really likes the 575, and it fits well with the annuity replacement program because of the fixed term, where annuitants or where folks in annuities are in typically a 10-year annuity or so. You're able to take them from that 10-year annuity and move them into a 5-year product. And again, I'll go over how the annuity replacement program works, but a lot of times the 575 is an easy transition from an annuity. So how does the Finders program work? I mentioned at the beginning under the disclosures that all securities require a FINRA license or permissible exception. The Finders program is essentially it's a referral program, okay? So the key part there is that the solicitation has to come from Deep Root. So as you have investors or clients that are interested and want to get out of their annuity and move into Deep Root, the key part there is that we do a quick call or video conference with you and the client. Honestly, it's usually about 5 minutes or so, very quick, where we discuss the fund that they're looking to go into and answer any questions that they have. And then we pass it back over to you. Obviously, you're managing that relationship and helping them fill out the appropriate paperwork to get them invested. The minimum investment is $50,000 for qualified funds or $25,000 for non-qualified. So we get that question a lot. If we can deal with qualified funds as well, yes, we can. That's not an issue at all. And then the compensation is pretty simple. Under the 575 income option, you're paid $6,000 per $100,000 piece of business. For the 575 deferred, the growth option, you're paid $7,000 per $100,000 piece of business, and the Q fund is $8,000 per $100,000 piece of business. So as we move forward, those that are interested in moving forward and working with Deep Root, we'll get you all of the contracting documents out. We'll get you the comp schedule so you have that as well. But obviously, this is just a kind of high-level overview so that you can know what the compensation is and how the funds work. So this is really why you're all here, annuity replacement program. Very simple. This is how it works. To qualify, the annuity has to have a surrender value of $150,000 or greater. Again, it can be qualified or non-qualified, but it must be all qualified funds or all non-qualified, meaning you could combine 2 or 3 annuities to hit that $150,000, but it has to be all qualified or all non-qualified. And then if the annuity has a surrender value of $150,000 to $350,000 or $349,000, we'll cover up to a 10% surrender charge. If it's greater than a $350,000 surrender charge, we'll cover up to a 20% surrender charge. Okay, so again, this takes somebody out of a 10-year annuity or longer, moves them into a 5-year fund with Deep Root. A lot of these annuities that are moving over are earning 1, 2, maybe 3% a year, and they've got a lot of fees on top of that. So it allows them to go from those returns to a 5, 7, 9% or whatever it is with Deep Root, and with no fees. And then also, most people won't move out of an annuity because of the surrender charge. We take that off the table, where we cover that surrender charge for them, so they don't take that hit or that penalty. Okay, so the annuity replacement program has been extremely popular for us, and works very well for clients that are in annuities that where it's not performing. They still want kind of the safety of investing with a life insurance company or that element, and with a fixed rate return that's not market correlated. So that's where we become a great alternative source to them. A website you guys can all write down is annuitytriage.com. This is a website we created and you can utilize. It does not say Deep Root anywhere on there, so you can fully utilize that for your marketing purposes. But what that does, I would highly recommend each of you going to it. You would input the specific numbers from an annuity into the calculator on annuitytriage.com. It's going to spit out about a 1 to 2 page report on how that annuity is actually performing. And then down at the bottom allows you to click a button that will then allow you to actually compare that client staying in the annuity versus getting out of the annuity and moving into an investment such as Deep Root. Again, it doesn't say Deep Root, but allows you to toggle the returns to what they would be earning with Deep Root, and shows them a side-by-side comparison of what they're giving up by staying in the annuity and what or what they have the opportunity to earn with Deep Root. And it also allows you to show where we cover the surrender charges as well, so you can take that into account for your clients. So very powerful closing tool for your clients with comparing the annuity versus another investment such as Deep Root. So that's pretty much all we have for the funds, as well as the finder's fee program and annuity replacement program. This last slide is just going over our April incentive, what we have going on now. And I know we're at the 9th of April, so we're already almost 10 days into the month. But this is just an incentive that we have going on if you want to take advantage, and if you have some clients right away that this does make sense for. So if you do fund at least $100,000 by April 24th, it was the 15th, but we extended it for you guys since we're just doing this on the 9th of April. So if you fund $100,000 into the Deep Root by April 24th, we'll pay an all expenses paid trip to Vegas. So that's just a quick incentive for you. But the big April incentive is for the investors. They would get a 52.5% fixed return. That was already built into the slides there for the DGRD. However, for the 575 deferred and periodic, the yearly returns are increased. So deferred, instead of 7% a year, your clients would get 10% a year, each year for 5 years. For the income option, instead of getting 5% income, they would be getting 8% fixed income each year, paid out in monthly payments. That's an incentive we're running through the end of the month. And then if they invest greater than $350,000, they'd also get a 5% back-end bonus. Okay. So where do you guys come in for the agents and advisors out there? 2 different monthly incentives going on. If you turn in and fund $300,000 in the month, or if you just turn in $500,000 in apps, not necessarily funding, then you would qualify for a $10,000 bonus, as well as $1,500 a month for the next 12 months. So a fairly rich incentive there, but it is the incentive we have going on for April. A lot of people have already started to take advantage of it. So again, if you have clients that this makes sense for, it's a way for you to get them some better returns for this month, and you get compensated as well for that. So getting started is pretty simple. We're doing the web demo right now. Barry and his group will get you the contracting documents if this is something you want to move forward with. And then once we get back the contracting documents, we'll get you some materials out. Initially, we'll send out some trifolds, some brochures on both funds. You can utilize those for prospecting with your clients. If you have clients in mind right away, we'll get you out some applications, PPMs, all the documentation you need to get a client invested into Deeproot. And then from there, it's just a matter of identifying which clients this makes sense for. Our most successful advisors and agents have gone back through their book of business and looked at what investors or what clients have old annuities that are not performing that they could help get out of and provide an alternative option, where before they really had no other option. Now they have a great option for those clients. And those have been the most successful, stories of agents and advisors going through and really just finding the clients that this makes the most sense for, and it's a quick way to get started. So just a quick reminder, we're a 506B, so there's no public solicitation on our fund materials, and we're working with accredited investors and a limited number of non-accredited investors. So that's all I have for you, but happy to clarify anything or answer any questions at this point in time.
All right. Again, anybody, I've got a few questions, but if anybody's got anything else they want to ask, please add it in the chat box. Nathan, one of the questions is on the life settlement policies that you're buying. Are you guys buying it at minimum size face or maximum, and about how many do you have in your portfolio?
No, there's no minimum or maximum. We work with a supplier and then our criteria that's outlined in the PPM to decide on what policies to purchase. Right now, I don't know the exact number, somewhere between 20 and 30. So not a ton, but a pretty good spread for the portfolio.
Okay. And then can you explain again on this bonusing program what you meant by the 300K with a 5% ending balance or ending portion?
Oh yeah, so on the investor side, so if they invest, let's say $100,000 in the 575 deferred, the growth option, instead of the 7% a year, they would be getting 10% a year. But if they invested $300,000, then they would be getting the 10% a year. And in addition to that, we offer a 5% back end bonus. So $300,000, you take 5% of that, and we're going to pay that out at maturity. So, and they'll see that reflected in their account right away.
Okay, so then that would be in addition to what the deferred account would be growing at, I gather then.
Correct.
All right. All right. Okay, thank you. Guys, appreciate again everybody being on the phone call. One of the things I really do encourage you is one, that website on the annuity triage is a tremendous tool for you. It's very easy to use, and it does help you determine very quickly if your client could qualify or not qualify into the program. And if it's kind of on the borderline, what I would suggest you do, call our office or call Nathan direct. He's super. He can answer any questions for you. And some of you on here I know have some sub agents. If they have any questions at any time, please feel free to give Nathan a call. He can answer all the questions and help you out in any way possible. So Nathan, thank you so much for the time, and everybody, I appreciate your time, and have a good week selling.
Awesome. Yeah, thanks for your time. Appreciate it.